When you are in the process of selling or buying a HDB flat, there are so many hidden fees involved that isn't well documented. As consumers, you would like to know all these necessary fees, no matter how small, so you know what to expect. Let's talk about the administrative cost first. The cost starts when a buyer buys your unit, and after you have received all deposits, we need to register your transaction with HDB so they can start processing your documents. This registration fee will be $80. On top of this, you will also have to pay for legal fees for the paperwork done, such as name transfers, discharge of mortgage, title search, and more. Basically, these are all the 20-30 pages of documents that you sign on completion day. Usually, if you're using HDB loan or fully paying off a purchase, you can engage HDB solicitors for $300 to $500 payable in cash. And if you're using bank loan, you have to engage a law firm that has been appointed in the bank's panel of approved lawyers. Expect to pay around $2,000 to $3,000 depending on the flat type and the loan amount. You'll need to pay for these fees for both your selling and buying. So if you're selling and buying a property at the same time, you'll have to pay these legal fees twice. For sellers, HDB will require you to pay up your property tax till the end of the calendar year. That means if you happen to complete your sales in January, you will have to pay up till December. Don't worry, the buyer will be required to refund you this amount on the completion day. So you're not going to overpay your property tax. You also have to close your town council account in person. That means you need to clear and pay up your service and conservancy charges, which is your tong sampah, till the last day you are the owners of the flat. Whatever amount you owe the town council, be prepared to clear the entire amount, otherwise you won't be able to complete the sales. Since you're talking about closing accounts, don't forget to close your utilities account. Especially with many owners tied up with third-party utilities provider, do check on how to close your accounts in advance. Do take note, agents are not in charge of this. What happens when you get an extension of stay from your buyers? Now, the person getting the extension, usually rent-free, are the sellers. But HDB will charge the buyers an administrative fee of $20 to officially register this extension. So don't forget to refund this fee to the buyers on the completion day. They're already paying the mortgage while you stay in rent-free. So let's do our part for a smooth completion. Remember the property tax that you have already paid up till the end of the year? Then the buyers have already refunded you the balance tax prorated from your sale completion date, right? Guess what? They will be charged again by IRS just because they allowed an extension of stay for you. During this period, IRS will see them as landlords of the property, even though they are not collecting any rent from you, the sellers. The property tax is usually $250 to $300 just for that 2-3 months extension of stay. I know it sounds ridiculous. Everything also we get taxed, right? It doesn't stop there. Your town council account that you have already closed is now transferred to the buyer's name. So for the 2-3 months you are staying in the property, the buyers have to pay for the service and conservancy fees while you stay in. And they don't get charged the normal subsidized rate. They have to pay additional as they are seen as temporary landlords. These are all the fees to refund to your buyer for the extension of stay. And buyers, don't forget to claim this from your sellers too. Now, don't forget the person working so hard to make your sales happen. The agency fees for selling would be a minimum 2% plus GST. And a 1% fee plus GST when you commit to a purchase through a professional agent. These are huge fees, so make sure you engage a qualified agent who will protect and fight for you whenever any complication arises throughout the entire sales process, and someone who plans your selling and purchase of your property like it's their own. Now, we're not done yet. There are additional fees when you are buying a property. For buyers, when you have decided on a unit, you have to place a deposit. This deposit ranges from $1 to $1,000 to bind the seller so that no one else can offer the unit. This deposit is called option fee. Once the seller accepts the option fee, seller cannot back out from the transaction. Basically, you want to chope the property and don't let any other buyers potong jalan already. At this point, you, Mr. Buyer, can still back out if you decide not to proceed with the purchase. So, after you chope the property, what do? You have to pay HDB $120 to churn out the flat value. So within 3 weeks of chopping the property, the buyer will have to complete this value request and place a second deposit to the sellers. Total deposit cannot be more than $5,000. $2 deposit also can, but do you think Mr. Seller will accept your $2 deposit? So, first deposit to chop, second deposit to confirm the purchase and submit the case to HDB. Earlier mentioned to be $80. By now, you should already have enough in your CPF for your housing deposit. Minimum 10% of your flat purchase price if you are using HDB loan for the first time. If you're buying your second HDB flat and you're using a HDB loan for the second time, be prepared to place a deposit of 50% of the value of your cash profit from your first house. That means if 5 years ago you sold off your HDB flat, you got 100,000 profit. HDB will require you to deposit 50,000 in cash today. Talk to your agent to get clarification on this. But if you take a mortgage from the bank, they won't ask the 50% of your cash profit, but they do ask for a 5% cash deposit minimum, and they can only loan up to 75% of the purchase price. For the remaining 20,000, you can use your CPF funds. I won't go into much details about the loan because this video is about the cost involved in selling and buying. Okay buyers, we are almost done. As Singaporeans, we must never forget our taxman, Mr. IRS. You will need to pay your purchase stamp duty, which is payable upon HDB submission. You can pay for this through your CPF ordinary account. If you don't have enough in your CPF OA, then you will have to pay it in cash. Stamp duty ranges from 4,000 to 15,000 depending on your purchase price. Do check on IRS website for more details on this. So now you've paid the seller, pay HDB, pay IRS, and you've gotten the keys to your flat. Next, you will have to take up a compulsory fire insurance with HDB appointed insurer, FWD Singapore. Do check out their website for details. It is usually less than $10. Please note that this doesn't cover your belongings. If not, where got so cheap? Second insurance to cover would be the HPS or the Home Protection Scheme. In the event one of the homeowners passed on or has a permanent disability before your loan is fully paid up, this HPS will help to fully pay off your loan. The amount varies person to person based on age and the loan amount, and it is usually paid yearly through your CPF funds. It stops its coverage after a certain year, so it's always wise to end your loan before you turn 55. I'll speak on the magic 55 plus CPF plus HDB in another video. Let me know if you'd like us to cover any relevant topics. So there you go. All the costs involved are listed out for all the consumers so that you are aware and prepared of all the payments due by sellers or buyers. If you need any clarifications, please comment on our video or simply drop us a line. I'm Sawadeen.